Ignition sequence starts. 6, 5, 4, 3, 2, 1, 0. Liftoff. We have a liftoff.
Hey everybody, this is the Digital Asset Investor, and the Ripple SEC lawsuit thing has really got everybody all nervous now. They think, oh, this thing's going to take this is going to be forever, and it could take a while. But then again, it could only last till tomorrow. Nobody knows. I mean, there's no way to know, but when they extended the discovery, anytime you get into legal cases, it's going to take a long time, but that's part of the whole strategy of the SEC on these types of things, which is, and I'm not an attorney, by the way, but that's part of the strategy is to try to drag it out and force Ripple to do a settlement. And like I keep saying, this is one of two things. Either this is a political thing to try to slow Ripple down and drag this out and get a hold of some of that escrow action, or all the world's a stage. And I know which one I think it is. Now, James Phelan, court grants in part the SEC's motion for additional depositions and denies SEC's request for documents post-dating the complaint about Ripple's lobbying efforts and for documents from General Counsel and Deputy Counsel order below. This is a good sign for the fair notice defense. Judge Netburn has made clear to the SEC yet again the focus of that defense is on the activities of the SEC and not on Ripple as the world turns, folks. Okay, but having to do with this, I thought this was an interesting tweet from Jeannie. Now more than ever, I'm seeing people leaving the XRP train, not this digital asset investor. I am seeing people leaving the XRP train because of the recent news. How clever the narrative be to be able to get rid of even the most seasoned of investors, not this digital asset investor. Don't forget, all can change in the blink of an eye. If you think I'm selling even one XRP, you're out of your mind. Not this digital asset investor. I'm not selling any. I will be here. Me and the cockroaches will be here when this whole thing's over. Okay? Anders L. weighed in on it. To me, especially now XRP is the long-term play. Realize that the lawsuit may be a long time to be resolved. The SEC is the final boss. If XRP is cleared by the courts in the U.S., the sky's the limit. Okay? Now, this is what I wanted to show you. This is what's his name? I'm drawing a blank on the guy's name. Paul Tudor Jones. Listen to what he says.
You made the argument, though, that it's math and that, and not that it's risk-free, but in terms of the risks, we haven't talked about two risks, which are risks long on the just capital list. Things around the environment, for example, geopolitical risks, whether the Chinese government or other governments decide to even allow it, whether the Fed at some point says we're not doing this. Right. How do you peg those risks?
So, again, it costs more to mine gold energy-wise than it does Bitcoin. Clearly, I'm concerned about the environmental impacts that Bitcoin have. If I was king of the world, I'd ban Bitcoin mining.
You would
just because of the environmental impacts, and then make the ecosystem figure out a way to do it without expanding the supply anymore at all.
Right.
That's what I would do. But can I just say, I do think that we are in extraordinary times. I hope that we'll mean revert back to economic orthodoxy. I really do. I get nervous from a financial instability standpoint when the stock market's 220% of GDP. I get nervous when...
Okay, I'm not going to play any more of that, but the idea of if he's king of the world, banning Bitcoin mining was the main thing on that. I was like, wow. Okay, this is fascinating to me. This is Muhammad El Arian, I think that's how you say his name. He's like a noted whatever, economist on CNBC. To me, this is so stupid what he's talking. He says I'm not even going to play it. It's so dumb. It's a tug of war between adoption and regulation, and Elon Musk has a huge influence on the adoption side of that equation. He's referring to Bitcoin. So some celebrity that just weighs in on their opinion of Bitcoin has a huge, what does adoption have to do with whether the thing's going to be used or not? Use case should be adoption. Utility should be adoption, not what some famous person. If this is the case, then next week when Paris Hilton decides she hates Bitcoin, it could also drive the price down. That is just lunacy to me. Okay, that's crazy. It's about as crazy as this. Jay Clayton weighing in on trust and fairness. Listen to this.
Yeah. Jay, let me ask you a question, though, and it goes to the sense of fairness. Democracy relies on the country feeling like the system is fair, that it's not rigged, and that certain people are not getting benefits that others are not. And so when people look at specific individuals who are effectively paying no tax and, of course, have enormous amounts of money, they raise questions and they say, does this make sense? In the private equity world, you're now on the board of Apollo. The issue of carried interest, for example, I think there's a lot of people, Jamie Dimon, the CEO of JP Morgan, who, arguably should be saying things in favor of its clients, says this is crazy. Carried interest makes no sense. And so there's and we just saw this New York Times piece over the week.
I'm not going to waste any more of your time with this. They got it. To me, it's insulting that they've got this clown who obviously has many questions he ought to be answering about the timing of what he did in filing the lawsuit. And they're having him on like he's some kind of expert, and he's going to have the gall to talk to us about fairness and trust. Please. Okay, Gold Telegraph, breaking news. Bank of England Governor Andrew Bailey has pledged tough love as policymakers look to regulate cryptocurrencies, warning that public interest must not be ignored for the sake of innovation. My warnings will come to fruition. Tough love. That sounds pretty scary. Okay, now, I cannot believe that Brad Combs had the gall to do an interview with a tax expert, and he actually had the gall to weigh in on his tax beliefs on how the Flare airdrop could be handled. He just gave his opinion. In the cancel culture, you're not allowed to give your opinion unless it's an opinion that everybody likes, I guess. But I continue giving my opinion. I'm not a tax accountant. I'm not a lawyer, not a financial advisor, but if I see an interview clip that I can play where I can get the opinion of somebody, whether it's the opinion on this or anything else, I'm going to be a recipient of Flare. I love what Flare's doing. I think it's great, but I am not, let me repeat, I am not going to not give my audience all of the different viewpoints on something that is not written in stone, which is how the IRS is going to handle the freaking Flare drop. You are not going to get some BS. I'm not being paid on either side of this. I'm not being paid by Flare, and I'm not being paid by anybody to talk, to say anything that might be perceived as negative about Flare. It's not about Flare. That's not even what I'm talking about. What I'm talking about is tax treatment. I'm talking about what I personally, for the Flare that I'm going to receive, I talked to my dad about this. My dad wants to know more about this because he's worried about it. He's been around, That's a quote from Son of a Woman. But my father is the one that brought this issue up to me, the official father of the Digital Asset Investor channel. And if my father, who's in his 70s and owned over 10 businesses in his lifetime, he actually worked for an accountant when he was 12 years old. He's not an accountant himself, but if anybody knows about the IRS and or at least has experience in dealing with the way they think, my father does. And so he planted this seed in my mind of this is a significant issue for my listeners. So I will not be ignoring the issue because people out there have fallen in love with the technology that is Flare and so we're not allowed to say anything that could be perceived as being negative. That's not being honest with my audience. So that's not where this channel is going. I'm going to tell you, I will show you both sides. First, I'm going to show you, these are opinions. These are, because that's the thing. Since and it's not about Flare, it's about the IRS. They're not giving us any clear guidance. So we have to get the opinions of our accountant or several accountants or several. So the first thing I'm going to show you is the opinion of this is the tax advice that the CEO of Flare, and I've played this before. I'm going to play it again in toto. Okay, Mickey B. Fresh had put this out, and we were glad to have it, and I thank him for it. I'm going to play you in total what Hugo Filion, I think that's how you say his name, from Flare. He's the CEO. This is what he said that their tax people had told them about the tax treatment of the Flare airdrop. Then I will play you a couple of clips of Clinton Donnelly in his interview with Brad Combs, where he tells you what he thinks, okay? These are the opinions of two different people, and I respect both opinions. And I'm going to have to make a decision and get with my accountant to make a decision on how I'm going to do it. But what I'm not going to do, and I'll repeat it, I am not going to stick my head in the sand and say, oh, so-and-so said this, and that one opinion is therefore law, because it's not. That's not the real world. And anybody that tells you it is not telling you the truth. And you have to wonder what their motives are if they're telling you, oh, you can only listen to this and you can't listen to this. That's not the way the world works. So here in the adult world on the Digital Asset Investor channel, we're going to show you both. So here's Hugo Filion from Flare.
Please absolutely. Please speak to a registered person who does that crap. And it's just it's a nightmare. I had like every caveat in the world. Please assume that I'm saying it. What I will say is very simple. We have spoken to a really highbrow tax lawyer, I suppose thinker even from Harvard. It's written a memo for us. There's a specific way that you receive the Flare distribution. So you receive 15% at day, let's call it 0, day 1. I mean, correct. And that genuinely is that is delivered at zero cost. Now, if you want the other 85%, you will be burning some of your Spark tokens, not many, not much. They don't have any value, in order to receive that. And that is considered a payment in order to receive the remaining 85%. And so you've paid for those tokens. You've paid for those tokens basically at day 1 at basically zero value. So then that means that you can then, according to the memo, and again, this is not tax advice, please speak to an accountant, please file your taxes correctly with the IRS, however your accountant tells you to do so.
He's literally telling you what I'm telling you. You're getting one opinion here, but talk to your accountant, talk to several accountants. He's right.
Et cetera. But, we've dealt with this question internally. That's essentially that absolves you from, basically you would still be receiving tokens and you would still essentially be taxable on them, but your basis for the tax is like zero. Gotcha. And so you would obviously pay a capital gains tax when you sell them, but that's the same with any asset.
Right, yeah. The concern was the difference between the IOUs.
The concern was, the IOUs are not anything to do with it. You can't use an IOU.
Okay, so you now heard in full the clip. This was what Mickey B. Fresh provided. Now, this is the interview with Brad Combs that Clinton Donnelly, he calls himself the crypto tax fixer. He says, we prepare crypto tax returns using like-kind exchange anti-money laundering firms, and we defend audits of crypto tax returns before the IRS. So now you're going to hear the opinion of Clinton Donnelly.
When we look at that, when we look at the initial drop of 15% of the Sparks soon, the question is, what would the fair market value be on that day? Well, since there are no willing buyers or willing sellers at the exact moment that the Spark token initially drops, then we can't really say what that price is. Basically, the fair market value is what the street price is. If we were to go to a coin market cap and say, what's the price of Spark tokens? It would list the price. Like a Bitcoin just hit 40,000. It tells us that price. But if we go there now on coin market cap, there's nothing. There's no prices. There's no one's trading it. So the fair market value would be 0 on the 15%. However, as each subsequent month has a 2 or 3% drop of coins, there will be a price for those coins on the coin market cap, and so that would be the fair market value is what the prevailing price would be. Since that's income, you would be subject to taxation on that. So at the end of the year, when you pay your taxes, then you would have to treat that all as income and pay taxes accordingly. You may want to pay estimated taxes.
Okay, and then this clip was also interesting. This is Clinton Donnelly this is Clinton Donnelly giving his opinion.
When you burn some Spark in order to take possession of it, that's merely a transaction cost. It does not set the price. So, Hugh is not a U.S. tax expert in these areas. So, I would point him to the same topic of constructive.
And I'll point out, he said he's referring to Hugo from the clip I played for he's the CEO of Flare, and I'll make the point that Hugo was not representing himself as a tax expert. He was talking about a memo that he had, that his company Flare has received about its one tax, I guess, expert or tax company. They had given them the memo on what they thought how it could be treated as tax. So it wasn't Hugo trying to say he was an expert. I'm giving you the overall fair approach here. This is not. So anyway, here's the rest of Clinton Donnelly's opinion.
Another issue as well. Some people are saying, hey, on that initial, all those tokens became mine on December 12th, 2020, when they were, I got the inventory, the snapshot. But the fact of the matter is, under constructive receipt, you did not have receipt of it. There were substantial limitations. There was nothing you could possibly do to get those tokens, so they were not constructively received for you at that date. Another theory, people call me up and ask, is, hey, Clinton, on that day that they finally released the first 15%, day one, the other 85% are given to me on the same date. They're just held in escrow or trust, and they're just releasing them over time. So in the fact of the matter is, that's a nice theory, and in fact that's their intention. However, it is not constructively received by the taxpayer. Those 85% are not constructively received until they're put into a position where he can then burn a Spark token and take them to himself. So, all those machinations are flawed. The final thought that people have is, hey, what if I don't take the tokens? What if I don't burn the tokens? I just leave them out there and I wait till some future date to take them. Wouldn't that be the date that I received possession of them? So yes, it is the date you received possession of them, but you constructively received them the date that they were made available to. So all those things fall the constructive definition issue.
Okay, so now you have both opinions, and now you should go and ask your accountant, because this thing is coming. Now, Clinton Donnelly is also, and by the way, I'll say it again, Clinton Donnelly is not paying me to tell you about this. Spark's not paying, or Flare's not paying me anything. Of course, they're not paying me anything, and that's fine. Neither one of these parties, all I'm telling you is that you need to think about the tax issue around the Spark drop, and that's all. And the only reason I'm bringing it up is because this is what I'm thinking about, okay? It's not anything personal with anybody. I don't have a problem with anybody on social media and all, even though many of them, I guess, have a problem with me talking about this adult, I repeat, adult topic that every adult should be, or anybody that has to pay taxes should be thinking about. So, Clinton Donnelly is going to be on Wednesday, June 16th at 3:30 Eastern time at what this is called the Clubhouse. I'm not even a member of this. I guess I'm going to have to figure it out too if I'm going to go in there. I'm going to try to be in there, so we shall see. I'm the digital asset investor. I'm not an investment advisor. I'm not a tax accountant. I'm not an attorney. I'm just some guy on YouTube, okay, who's trying to be honest with my audience. Thank you for listening. Please subscribe, hit the like button, and tell your friends and family that they do need to think about the Spark token drop and the tax implications, and factor in several opinions of several tax professionals, and certainly not my opinion. Thank you for listening.